Exam Scholar, Real Estate Edition.
Question 1. Delinquency in real estate terms means A. A failure to pay mortgage payments on time. B. Failure to notify by recording of the deed. C. Failure to provide required disclosures. D. None of these. Answer. A. Failing to pay mortgage payments on time creates delinquency of the loan. Question 2. A credit repository is A. An organization that gathers, records, updates, and stores financial and public records of individuals being considered for credit. B. The institution that issues a FICO score. C. TransUnion. D. None of these. Answer. A credit repository is the institution that gathers, records, updates, and stores financial and public records of individuals being considered for credit. Question 3. Real property where all the owners own the property, common areas, and building together but with the exception of the interior of the unit to which they have title is called A. An apartment complex. B. A condominium. C. A planned development. D. A homeowners association. Answer. B. This is the definition of a condominium. It is a type of ownership. Question 4. An additional individual who is both obligated on the loan and is on the title to the property is called A. An agent party. B. A co-borrower. C. A partner. D. A borrower in trust. Answer. B. A person that is added to the loan becomes obligated for the loan and is also on the title to the property is called a co-borrower. Question 5. The certificate of reasonable value is issued after A. An appraisal of a property being bought with a VA loan. B. The sale of the property being bought with a VA loan. C. An appraisal of a property being bought with a conventional loan. D. The sale of the property being bought with a conventional loan. Answer. A. The certificate of reasonable value is issued by the VA on a property after an appraisal has been issued if the property is being bought with a VA loan. Question 6. If a property is being evaluated for tax purposes in regards to its value, this would be called A. An assessment. B. An appraisal. C. An estimate. D. A county recording. Answer. A. When a property has a value placed on it for purposes of taxation, this is called an assessment. Question 7. The Veterans Administration is an agency of the federal government that A. Guarantees residential mortgages made to eligible veterans of the military services. B. Issues loans directly to veterans. C. Protects veterans against loss in the housing market during a downturn. D. None of these. Answer. A. The Veterans Administration is an agency of the federal government that guarantees a lender against loss on loans made to eligible veterans. This encourages lenders to make more loans to veterans because it is guaranteed against loss. Question 8. Disputes over the ownership of a property can be protected against by purchasing A. Lender's insurance. B. Title insurance. C. Conveyance insurance. D. Deed insurance. Answer. B. Title insurance protects the lender or the buyer against any loss arising from the dispute over ownership of a property. Question 9. If a lien has a lower priority than the first mortgage or lien, this would be known as A. Subordinate. B. Under. C. Inferior. D. Underprioritized. Answer. A. Subordinate financing is any lien or mortgage that has a lower priority than the first mortgage. This means that any creditor would be paid on the first mortgage or lien before all others. Question 10. When a loan is backed by security or collateral, it is called A. A secured loan. B. A protected loan. C. An insulated loan. D. A collateral loan. Answer. A. A secured loan is any loan that is backed by collateral or security. Question 1. A nonconforming loan is a loan in the amount over A. $147,000. B. $417,000. C. $500,000. D. $1 million. Answer. B. Fannie Mae and Freddie Mac's loan limits are any loan up to $417,000. Any loan over this limit is known as a nonconforming loan or jumbo loan. Question 2. The Government National Mortgage Association, that provides funds for government loans like FHA and VA, is also known as A. Ginnie Mae. B. Ginnie Mae. C. Freddie Mac. D. Fannie Mae. Answer. A. Ginnie Mae is the other name for the Government National Mortgage Association. It was created by Congress and provides funds for FHA and VA loans. Question 3. If a lender is issuing an FHA or VA loan, where does the funding originate? A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. From the lender. Answer. A. Ginnie Mae is the name for the Government National Mortgage Association. It provides funds for FHA and VA loans. Question 4. Ginnie Mae is owned by A. The government. B. The private stockholders. C. No one. It is a non-profit. D. None of these. Answer. A. Ginnie Mae, or also called the Government National Mortgage Association, was created by Congress in 1968 as part of the Housing and Urban Development Act of 1968 and is owned by the federal government. Question 5. The Federal National Mortgage Association is also known as A. Ginnie Mae. B. Fannie Mae. C. Freddie Mac. D. Freddie Mae. Answer. B. Fannie Mae is also called the Federal National Mortgage Association. Question 6. Fannie Mae is owned by A. Shareholders. B. Private entities. C. The government. D. None of these. Answer. A. Fannie Mae is a shareholder-owned company. Question 7. The largest supplier of home mortgage funds is A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. Private lenders. Answer. C. Fannie Mae, also called the Federal National Mortgage Association, is the largest supplier of home mortgage funds in the United States. Question 8. Which of these is a congressionally chartered organization? A. Fannie Mae. B. Freddie Mac. C. Ginnie Mae. D. Both Fannie Mae and Freddie Mac. Answer. D. Both Fannie Mae and Freddie Mac are congressionally chartered organizations. They are not owned by the government but by shareholders. Ginnie Mae is fully owned by the government. Question 9. When a buyer gives earnest money to a broker, the money is then put into A. The broker's bank account. B. An escrow account. C. The seller's account. D. None of these. Answer. B. The earnest money is placed in an escrow account until the transaction is closed. When the transaction is completed, the money is then delivered to the seller. Question 10. Which of these is considered to be an encumbrance? A. A lease. B. A mortgage. C. An easement. D. All of these. Answer. D. A lease, mortgage, easement, or restriction is considered an encumbrance of a fee simple title. Question 1. An index used to determine interest rate changes for certain adjustable rate loans is called A. Treasury index. B. Rate index. C. Adjustable index. D. Interest index. Answer. The Treasury index is an index used to determine interest rate changes for certain adjustable rate loans. Question 2. A written justification of the price paid for a property, primarily based on an analysis of comparable sales of similar homes nearby, is called A. A comp. B. An appraisal. C. A similar analysis. D. Neighborhood investigation. Answer. B. An appraisal is a written justification of the price paid for the property. Question 3. The property that will be pledged as collateral for a loan is known as A. Security. B. Pledge. C. Promise. D. Collateral. Answer. A. In this case, the security is the property that will be pledged as collateral for the loan. Question 4. The buying and selling of existing mortgages, usually as a pool, is called A. Primary market. B. Secondary market. C. Tertiary market. D. Market index. Answer. E. The secondary market is the buying and selling of existing mortgages. They are usually sold as a pool. Question 5. Ingress or egress means the right to A. Enter or leave designated premises. B. Buy or sell designated property. C. Exclude or include individuals from a designated property. D. None of these. Answer. A. Ingress or egress means the right to enter or leave a designated premises. Question 6. A tenant is excused from paying rent in the event of fire or casualty damage and the landlord receives uninterrupted income while the premises is unusable by means of A. Rent loss insurance. B. Hazard insurance. C. Rental insurance. D. Property insurance. Answer. A. Rent loss insurance covers a landlord for lost rent in the event of casualty damage while the premises is unusable. Also, the tenant is excused from rent for this period. Question 7. The noting in the registrar's office of the details of a properly executed legal document, such as deed, mortgage note, satisfaction of mortgage, or extension of mortgage, thereby making it a part of the public record, is called A. Recording. B. Notation. C. Delivery. D. Registration. Answer. A. Recording is when the details of the properly executed document are noted in the registrar's office, making it a matter of public record. Question 8. A purchase money transaction is A. The acquisition of property through the payment of money or its equivalent. B. The acquisition of property through the securing of sufficient loan amount. C. The acquisition of property through the promise of sufficient collateral. D. The acquisition of property through the payment of equal property. Answer. A. A purchase money transaction is the acquisition of property through the payment of money or its equivalent. Question 9. What does PITI stand for? A. Principal, interest, taxes, and insurance. B. Property, income, taxes, and insurance. C. Prime, income, tenement, and insurance. D. Principal, income, taxes, and insurance. Answer. A. PITI stands for principal, interest, taxes, and insurance. They are the four components of a monthly mortgage payment on impounded loans. Question 10. The four components of a monthly mortgage payment on impounded loans are A. Principal, interest, taxes, and insurance. B. Property, income, taxes, and insurance. C. Prime, income, tenement, and insurance. D. Principal, income, taxes, and insurance. Answer. A. PITI stands for principal, interest, taxes, and insurance. They are the four components of a monthly mortgage payment on impounded loans.
Exam Scholar, Real Estate Edition.